Hey YouTube, Jason here with DayTradingFearless. Welcome back to my channel. If you're new, welcome. Make sure you hit the like button and leave a comment. As always, let's jump right into it. So this is not a paid advertisement. I'm not sponsored by Nadex. This is just a product I really like and I want to share with you guys. A couple great things about Nadex. They're ran by the CTFC exchange, so they're futures product. So at the end of the year for taxes, you only get one bill. You either made money or lost money. It's not like stocks where you have to deal with wash rules, all that. Also, there's no day trading rules, so you don't need $25,000, anything like that. You can buy and sell all you want. And if you have a small account, it's a perfect thing to trade futures, gold, forex, things like that. So let's jump right into it. Once you have an account, click login. Once you're logged in, you'll see something like this. What we're going to be talking about today are knockouts. What is the knockout and how to trade them? So if we come over here to indices, right, you could trade Forex or commodities, but I trade the S&P E-mini futures. The way these work is you have weekly contracts. They expire one of two ways, either by the end of the week, okay, or when one range gets hit. So right here we have ranges 29.12 by 29.62, okay? And what these are is, this is the S&P E-mini futures current price, right? 29.29. So we're kind of right in the middle of this range. So we're going to click to buy the blue or sell the red. So let's say we're bullish, right? We click to buy. Come over here, minimize that. We'll minimize this over here. And this is essentially what we're looking at, right? So we have an upper range and a lower range right here, okay? So with that being said, what this is right here is if it touches this lower range or touches that upper range at 29.60, we can look 29.12 to 29.62. If it touches one of those ranges either up or down, okay, then the contract expires and your position goes to cash, okay? So let's say we're bullish on this chart. And the one thing, if you saw my video on the call spreads, which are these, right? If you go these call spreads, you'll understand why I like them and why I don't. But these, because you have time decay, so they don't trade that great when they get to the edges. The things with these are actually really good because it's just like you're trading 100 shares of SPY. Okay, and the best way to look at that is one contract is 100 share and there's really no time decay. So if we get to the lower range or the upper, they still trade dollar for dollar. So let's say we're bullish and we think it's going higher. Well, if we click on buy and let's put this at 29 even, 29.30 even, one contract, well, my max loss is if 29.12 is touched. So because I'm long, if it touches here, the contract expires and I'll lose a total of $180. But if we do rally all the way up here, my maximum profit is $320. The great thing with with a Nadex is you only need per contract the most amount you can lose. So I only need $180 of capital to put this trade on. So let's say all I have is $200 in my account. I can actually trade this because it'll use $180 of my capital and that's it. And so if it does rally all the way up, I could double my money, right? If we get a 20-point runner, so let's say we go all the way up to 50, right? 29.50. Okay, well, once you get to 29.50, you could see it changes your whole risk profile, but instead of 180, it's 380. right? So if you think about it, I would have made $200 on a 20-point move, which goes back to it's 100 shares of SPY, but you're only using $180 worth of capital. Now, if you are bearish, you would just click on the sell, look for, and you want price to go lower, right? So if, let's say we are able to get short at 29.30, okay, our max profit if we go is 180. Our max loss if it goes is every 1 point, 30 to 31, we're going to lose $10. But every 1 point lower, we're going to make $10. Remember, 100 shares of SPY is equivalent to, which would be the $10 is equivalent to 1 point in the S&P E-mini futures, okay? Or 10 cents in SPY on 100 shares is the same as S&P E-mini future. So it's a great way to trade without having to deal with all the SEC rules and all that. Now, you can be in this trade for the entire week. Okay, or if let's say I'm short this and price comes down and touches 29.12, boom, it'll fill. Okay, both of these brackets, whoever's on the long side, they take their max loss, right? It doesn't go below and then go back up like the call spreads. Once one's touched, it automatically is done. There's no more trading for this contract. Everybody either goes to zero or whatever their max profit was. Okay, now, what's cool are see these little blue lines, okay? And these are only on the knockouts. If I click on it, it changes what they are. So if I want to buy, let's click this. And we click on buy, right? Now, this is 28.82 even by 29.32. So think about this for a second, okay? We could actually get short this if we think, hey, look, there's a divergence. You guys know me, I love divergence. You could get short at 29.30, we'll say, one contract. Well, my maximum loss is $20. If it goes up 2 more points, I could lose $20. That's it. But it can happen real quick. If they spike it up real quick, it touches, boom, the contract's over. But what if this is the high and we start to roll over from these levels? Well, what I can make, I literally only have $20 worth of risk. And let's imagine, right, just for fun, we roll all the way over and come down here, I would make $480. Okay, so, but again, now you're trying to pick tops and bottoms. Not saying can't do it, right? This trade might actually be a good trade where you only have about $20 worth of risk. Sorry, you would actually click on the sell, not the buy, right? So you only have here, if this went up to 29.30, right, I would only have $20. Sorry, I got that backwards because I clicked on the buy. So you actually want to click on the sell. So you will only have $20 worth of risk. Okay. Now, if I want to buy it, if I actually think we're going higher and I want to make a quick $24, I could buy this right now, click buy, see the pullback, and then get long because overall the trend is higher. I could look at it that way and now look at the divergence, right? So I would click the buy. I only need $24 of capital. If we had a quick pop to the upside, then I would make a quick $24. If I want to change, okay, and look at a different strike, okay, I could come over here. I could even look at this one, and you would just either click buy or sell. It pulls up the ticket, and again, you could put those trades on. So these are the knockouts. I love them. There's really no time decay you got to worry about. You could trade these for the week, or okay, so you can kind of let the trade go. You know your defined risk. meaning if I want to get long here, if I think we're going to just slowly grind higher over the next day, overnight session, whatever, and we're kind of bullish, right? I could say, hey, let me get long here. My total risk is 180, but if we rally 10 points, I'll make $100. Again, not a bad risk reward, but I know exactly what to do. So I hope you guys enjoyed this video. I apologize again for kind of doing that backwards of the buy sell, but hopefully you get the gist of it. And until my next video, we'll talk to you soon.